Hi everyone, my name is Adam Davis and welcome to episode 4 of the 11FS Newsroom. In this weekly show, we take a deep dive into the biggest news story of the week just gone. But before we get started, a shout out to our sponsors. So this episode of the 11FS Newsroom is brought to you by Radar Payments, who are connecting payments to commerce worldwide. Radar Payments take out the complexity of payments to let banks, neobanks, PSPs and fintechs solely focus on delivering a frictionless customer experience. The white label one-stop service lets you issue payment instruments, accept the widest range of payment methods online, in-store, in-app, in over 100 currencies, and run your payments business, putting your brand at the forefront. To find out more, visit www.radarpayments.com. Cool. On with the show. So today we're talking about the email that Klarna sent last week, which was featured on FinTech Insider, which was released yesterday. The email prompted a major security and privacy discussion in the industry. Before we start, I've got a bit of a monologue, so I'll just go into sort of recap exactly what's happened for you guys. So numerous people reported last week they'd received a marketing email from Klarna, despite seemingly having never used the payment service. This was followed by an apology from Klarna. Klarna's PR representative has actually reached out to us and has given us clarification on a couple of points, as well as the email that they sent out to customers. So I'm just going to read this through. Assume that I am a Klarna spokesperson because it sounds better in that tone of voice. On the 12th of October, some people received our newsletter by mistake. This was a human error and the email was incorrectly sent, for which we are extremely sorry. At no point has customer data been compromised and the data has been used in line with our terms and conditions and our privacy notice. Cool. The email was sent to Klarna consumers who have recently used one of Klarna's products or services, including Klarna's checkout technology. Klarna's checkout technology is a product some retailers use to process payments on their website. This means that Klarna processes all credit and debit card transactions for these retailers, which is really interesting, and we'll get to that a little bit later in the show. Whenever anyone uses Klarna's checkout, this is still the statement, by the way. Whenever anyone uses Klarna's checkout technology, they agree to the terms and conditions and our privacy notice, which allows Klarna to promote its products and services to them. We would like to reassure consumers who mistakenly received this email that they have not been added to a marketing database in accordance with our internal policies. Consumers normally do not receive newsletters unless they have opted in or downloaded our app. We're currently investigating how this happened and are taking action to ensure nothing like this can happen in the future. We take matters extremely seriously, and consumers can view our privacy notice and our service terms for our products on our website. We, as in Klarna, this is the last point, are currently investigating how this happened and are taking action to ensure nothing like this happens again. Right, to find out more about this and just to listen to somebody else and how GDPR data was really handled in the third-party checkouts, we're joined by two amazing guests. Joining me is Alex Tapia, financial campaigner, campaigning for the regulation of buy now, pay later, and also founder and author of Go Fund Yourself, and Stafford Sumner, who's the managing director of Durang. And look like that, like Harry Potter's magic. You guys have appeared. Fantastic. How you doing?
Very well, thank you for having me.
Great, Adam. Thanks for having us on.
Cool, no worries at all. And where are you guys dialing in from? You in London? You out of London? You've gone fully remote?
I'm in London, yet fully working from home situation.
Well, I've been in the southwest of the UK since the beginning of lockdown, so I've been lucky enough. I've been trapped on a farm, but I've just come into our local office to get a better connection because my 0.8 meg connection probably wouldn't sustain us through the next 30 minutes.
Yeah, and background noise as well, so that's good. Alice, I understand this is your second time in a week on the show, so one more and you get the hat-trick football.
I know.
Quite the memento.
Thank you. I feel very honoured. I feel very honoured.
I wouldn't be sorting out the football, but don't worry, it will make its way to you. Cool. As always, we love getting your questions. Leave them in the comments sidebar and we'll answer them live on the show. Let's start a little bit for an introduction to you guys. Alice, do you want to just talk about a little bit of your background, the campaign, and Go Fund Yourself?
Yeah, absolutely. So, fundamentally, I'm a financial campaigner, which is why I'm here today. Back in June, I launched the Regulate Buy Now Pay Later campaign, which is calling for unregulated buy now pay later products such as Klarna's pay later products to be bought in line under the Consumer Credit Act. But I also run Go Fund Yourself, which is a financial news and financial education platform, basically trying to make personal finance, what's going on in the economy, relevant and relatable to young people today.
Cool, awesome. And Stafford, what is Jarang?
Well, hi there. My name is Stafford. I'm the managing director of Jarang. Jarang is an email marketing agency. We specialize in helping businesses manage their email marketing programs, particularly where brand and compliance are a key consideration for them. So for the last 17 years, we've been working with the financial services market to capitalize on the email channel as a key method of communication for their marketing and business development.
Cool. Okay, fine. So you two are pretty well qualified to talk about this, which is great. So let's talk about the email itself. I suppose, like, initial reactions. Stafford, we can start with you. Initial reactions when the news came out, like from a marketing perspective, you just like, oh my god. Take it away.
Well, it's quite funny because when that news story broke, I thought someone's having a bad day. It felt to me as if, actually there is going to be a marketing exec somewhere in an office wishing the ground was going to open up and swallow them whole. I mean the big difference with this is I think it's not a data breach in the realms of cyber attacks like we've seen with British Airways or like. This is where someone has legitimately, if not maybe in a slightly opaque manner, collected data and has accidentally sent a marketing communication to people that they shouldn't have done. That doesn't make it right, but I think it's genuine human error, and I think Klarna's PR have come out and said, this is human error. We're going to try and put process in place to stop this from happening again. But from someone who's been doing this for best part of 20 years now, and have sent many campaigns to many millions of people, it's easy to see how it might happen without the right processes in place.
Yeah, no, makes sense. And Alice, yourself, I mean, you covered it a little bit in yesterday's show, but I suppose just given your campaign and what you've been up to over the past few months, like your feeling on this email and the repercussions of it.
Yeah, well, I received the email myself, which kind of complicated matters, I guess. But I also, having done a lot of campaigning around it, had lots of messages from people saying they'd received it too. But I think Stafford's right in that this isn't, it's not the same extent as some data breaches that we've known. But I think the reason that it's attracted so much kind of attention and is potentially more problematic is that, Klarna have already been at the center of quite a debate recently around kind of the ethics of their products and regulation. And, in any instance, a customer receiving an unsolicited email not a knowing customer is receiving an unsolicited email is never really received well. But I think to complicate matters, the nature of the product being a credit product and the current times that we're living in, and particularly, young people receiving these products on the whole, I think it kind of adds fuel to an already burning fire, which is perhaps why it's been received with such kind of degrees of suspiciousness.
Yeah, I mean, I'm really interested. Like, the embedded finance space is something that we've been shouting about in 11FS for the last few months, and we've released papers on it and thought leadership, etc. The really interesting thing around that is that the layers of finance that goes into, let's say, providing a payment solution mean that you might not actually know who you're entering into a contract with, if you like. You can be on a merchant's journey, but you actually are doing an underlying transaction with, let's say, somebody else. And I think that in this case, that's really interesting to bring to light in the context of this, regardless of whether it's final or not. In that context, and Stafford, this might be one for you. Is Klarna, as the underlying payments provider, are they allowed to keep your email if you seemingly haven't signed up for their product? And that can apply, of course, to any payment processor.
I think it's a really interesting question. I think it's probably multi-layered. As Klarna, the product itself, the buy now, pay later element, if you're engaging in a relationship with Klarna knowingly, and their terms and conditions, have that in there. There is a legitimate interest, that's the legal basis that they could utilize to continue with ongoing marketing beyond that initial engagement as a Klarna user. The complication comes in whereby the payment technology is being provided by Klarna. So for those people that aren't fully versed in it, you've got Klarna are also providing the credit card processing. So when you go onto the checkout, you'll see you have the option to buy now, pay later with Klarna. You have the option to pay with your normal card, your credit or debit card, or potentially PayPal may link out to. And what's happening here is when you go through that transaction, if they collect the email address as part of that transaction, they are able to use it, and you buy with Klarna, they're able to use it for marketing purposes. But what many consumers won't know is that Klarna is providing the technology. There is some small print, there's terms and conditions at the bottom. It's there, it's technically correct. It may not be overt, but they can store that email address, and the legal base they're using is to fulfill contractual obligations. So that's as the payment processor. So that would be the same way as if WorldPay were processing it, they could capture the email. So that's in order so they could potentially send an invoice, or if there's any challenges on the payment, they've got those contact details there. The difficulty is what's happening is it's going into one pot. It's going to, if you imagine one big pot of data at Klarna, you've then got this one big pot of data, and there are literally going to be columns, there are going to be tags. These are the people that use the Klarna service, which we can continue to market to, and these are the people that use the payment processing. They may not even know that it's Klarna, and they will or won't have tags against them. And when they go to send out the campaign or the marketing campaign, what should be happening at exec level when they're actually deploying that campaign, they should be segmenting that data to ensure that it only takes the data with the right tags. And this is where the human errors probably come in here, where you've got legally they are able to do what they're doing. I do feel there could be more in the realms of transparency, particularly at the payment processing side of things, to say, look, you will be added to our database, but we won't send you marketing communications. And that's kind of where it's happened. So I think that the policy will be probably in place and probably robust, but it will probably just be down to their deployment process, their checkoff process, where they haven't got it honed well enough yet to see off some of these potential errors.
And then is that all wrapped up in the GDPR regulation? So I'm just, I know there's sort of data act provisions that were put in, I think it was in 2018, to sort of govern how you keep data and how you use data. And then GDPR sort of come in above that. Is all this sort of governed by, I'm kind of thinking if they're going to get into trouble, if anyone is going to get into trouble for doing this, as in not something that's technically illegal, because, as you say, the customers knowingly or unknowingly signed up to this, but more, is there a recourse for, from a regulatory perspective to say, actually, you know what, we're going to set a standard and you need to hit that standard next time, so we're going to make, let's say, an example of that.
I think in terms of GDPR, yeah, that's been around since May 2018. I think there's probably multiple threads to that answer, because GDPR is the kind of the minimum. It's not, there is the legal minimum, and then there is best practice and transparency. And I would have thought that brands like Klarna and other financial services brands, need not only to be adhering to their legal obligations, but also to their brand obligations of being completely open and transparent about what they will do with data. I think Klarna did a great job in their defense of they got out in front of the story as soon as it broke, and they were there, said sorry, they put their hands up, they apologized, they knew they made a mistake. And the ICO will go in, they'll ask questions, they'll do their inquiries. The ICO that isn't there necessarily to make big examples out of people who've made where there's been human error. They'll want to review policies. They will want to have a look at what their practical deployment practices are, maybe ask questions on that one, give some advice to how they can prevent that happening again. But I think, in terms of legally and technically, from what I've seen or from what we understand, the the terms and conditions are correct. I think I'll just finish off by saying that GDPR is only really a European UK regulation, and one of the issues you have with international companies is they're working in multiple territories. So whilst GDPR should be utilised and followed to the letter for those territories that have signed up to GDPR, which includes where we are here in the UK today, there are many territories like the US that don't have the equivalent of GDPR. In Australia, you've got the Australian Privacy Act, which is similar. And this is one of the issues with sort of fast growth or international businesses, where they do have to adhere to some set of rules, and they need to make that clear. But if they are operating within the UK and Europe, they need to be following GDPR, and obviously this has affected UK and European contacts.
Right. Okay. Cool. Now that will make sense. I mean, even to me, and I know very little about GDPR in its wider sense, so that makes sense. That was good. And Alice, just a quick one for you then. So, given everything, I guess, that we've learned about this and we know about it, has there been any wrongdoing here? So they've obviously apologised. They've said that this was a mistake from the error. But from a customer perspective, I mean, I must get 1,000 emails a day, and 90% of them are trying to sell me some Bitcoin scheme that I definitely didn't sign up for. So I mean, from your perspective, has any wrongdoing been done here?
Sure. So I think, I mean, obviously I can speak from my kind of personal experience of having received the email myself, and I agree, you receive emails all the time and you don't necessarily question where they've come from. I think increasingly that's shifting and changing, and certainly I had sort of a couple of hundred messages, I'd say, about this particular email, and the kind of, I guess, anecdotal evidence would be that people do care, but maybe that is, as I said previously, more a reflection on the suspiciousness and problems sort of around the company as they stand currently, as opposed to just a data issue. I think also that's just an interesting kind of philosophical question to be had around terms and conditions, and particularly around financial services and financial products. Is it okay to kind of hide stuff in terms and conditions and not make consumers sort of totally aware of maybe how their data is being used and so on? I mean, I think that also aligns to kind of some of the other issues that I've been raising in the campaign around a lack of transparency and maybe that kind of creating a lack of trust, I guess, with some of these buy now, pay later providers. At the beginning, there were sort of various contradictions around, what happens if you don't pay, and contradicting information. So I think that's part of it as well, is that increasingly people are wanting transparency and to know, what happens to their data, what happens if you use a financial service, and just feeling really clear on that.
Yeah, it's a hard balance to strike, because if you're a merchant and you've bought in Klarna, and Klarna in theory is going to increase your conversions at checkout by X%, which it does, it's been proven to do. In theory, that already for having, I suppose, the ease of being able to have a better or a financial product that works for the consumer, you're adding friction at checkout. And I guess the one thing that T's and C's, and I've worked on financial products when we've taken them to market before, and how you do terms and conditions and how you package it up is always balanced with what's just going to turn the consumer off, so that they don't actually end up fulfilling the product or the service that they want to procure. Really, really difficult balance. I suppose, have you seen in the industry anything that you thought, especially from a financial sense, that, oh wow, they've done, I mean, we're talking like this is like fintech nerd stuff, but have you seen anything where you thought, wow, they've done terms and conditions well?
Yeah, well, it's a good question, and I think I would sort of turn that round and say that, realistically, does anyone read terms and conditions? I don't think so. And I guess that's sort of where my argument comes in around regulation, which is that it shouldn't necessarily be up to the companies to sort of work out, oh, do we make this transparent or not? Ultimately, that's what the regulator's for. They come in and they say, okay, you need to put this in adverts, and you need to put this, at checkout or at the point of purchase when you're applying for a financial product, or so on. So So I think that's kind of how I feel about it, that I ultimately, I don't think people, particularly, you know, looking at the kind of demographic that, you know, Klarna are often targeting, which is young women in their 20s. You know, I certainly know that I don't read terms and conditions, and so I think therefore there's an obligation to do that anyway. And I'm not just talking about data, obviously, I'm talking about kind of, you know, consequences of non-payment, that sort of thing. You know, I think there's an obligation to do it, but also it comes down to the regulator should be enforcing that too.
Yeah, we'll come on to the regulator in 1 minute. I just wanted to ask about the merchant just very quickly. Do you think it's also, you know, and again, we've got loads of these companies now. We've got, I think there's ClearPay who've just done a deal with M&S, Marks and Spencer for the service. I think PayPal have just launched, is it PayPal 3? They've brought over, so they're now also going to offer buy now, pay now services when they partner with merchants. Is it, do you think there's a responsibility on the merchants also to get this right? Because ultimately, you know, the user journey that you go through is owned by the merchants. And again, having sat in that conversation between, you know, a financial provider trying to embed themselves into a merchant's journey, it's generally the merchant who holds the rates, because ultimately you are in their experience and they want to continue your journey in their experience with minimal friction. So, but how much, let's say if Klarna are regulated to some point more than they are to address this kind of this issue of not knowing what you're signing up to, how much onus then needs to be placed on, let's say, a merchant who might be in retail and never going to be regulated, let's say, by the FCA?
Yeah, it's a really interesting question, and it's something that I've been doing a lot of work on recently, actually, because not only are you sort of seeing that the merchants are integrating these products into their customer journey, but they're also running promotions around the use of these products. You know, say offering 50% off when, you know, using ClearPay or Klarna, whatever. So that's part of it. They're also working with influencers quite heavily to kind of push these products. So there are all these new ways that customers are encountering financial products, which we've not previously seen before. So absolutely, kind of in tandem with regulation, I really kind of would encourage retailers to take more responsibility as well and think about how they're communicating the risks of these products, how they're making that clear throughout the customer journey, and you know, promoting responsibly too. I think that's super important. But just to be clear, I think it's, you know, also it's worth me saying that, you know, I am campaigning about this, but I'm not saying that these products can't be useful, that they can't be used well. They can be, and they can also be really useful for merchants too. But I think it's just that balance. And at the moment, because they're fairly new products, they're unregulated, there is very, very little information out there for consumers to make good financial decisions around them, particularly those that maybe are young and more vulnerable.
Yeah, no, that all makes sense. Let's mention, because we've talked about regulations a few times, let's talk about that. I will just say that Klarna's PR representative also informed us of the following. It's not as long as the last one, don't worry. This is just one paragraph. So the FCA is, and I think we might have brought it up today, but the FCA is progressing with a review of the entire unregulated credit market, of which, as we know, buy now, pay later forms one part. And we're proactively engaging with them as part of that process. Again, assume I'm speaking on behalf of Klarna. We strongly believe that no interest and no fee products, coupled with our strict eligibility checks, almost got that out, on every purchase, are a better alternative to the high street traditional credit market. We also, just to be, again, just clarify, we've got statements on other unrelated matters, but we've only included those that are relevant to this discussion for this part of the programme. Given that, so around the, especially around the FCA regulations, like, what are you expecting to see, Alice, that will kind of, I'm interested in both your points. Alice, what will you see that you think will address this? And then Staffan, leading on that answer, do you think that's enough versus other industries out there in the UK?
Sure. So,
Alice, I think you should go.
Yeah, I'll go for it. So, I mean, there's sort of two strands to it, I guess. Well, three. There's the retailers, merchant bit that I just talked about, but then, you know, FCA regulation, fundamentally bringing them in line with other credit products to ensure that, you know, consumers are being given all the information about risk, at the point of purchase and in adverts. And also, I think there's a need for the FCA to also think beyond that, given what I was saying about the new way that financial products are being sold and marketed and communicated, through social media. I think that's a really interesting challenge and something that needs addressing. And then the other side to the campaign is on the ASA, the Advertising Standards Authority, and they're currently also conducting an investigation into working out, what does best practice, what could guidelines look like around the responsible promotion of buy now, pay later, because that's been another issue.
Yeah, and Stefan, I'll probably turn to you now, because again, just understanding a little bit about the embedded finance world and the way that certainly banks and fintechs want to go, which is to, if you like, to Alice's point, almost bury and integrate their financial solutions into other journeys as much as possible, which is being made possible by marketing technology and whatever else. This is going to become more and more of a used solution, but then also this specific part is going to become potentially more of a problem. So how have you seen in other industries this being tackled well? And I guess what are the things that merchants and also the providers need to think about as they do it?
Yeah, well, I think the financial services market, regulated and unregulated, it should, in terms of data privacy and privacy laws, it shouldn't matter whether you're regulated or unregulated. It's the same high level of standards should be there throughout. So I think that shouldn't make a difference at all. I think in terms of brand reputation, I think that's the big issue. Again, it just goes back to what I was saying earlier on, is there's a difference between what's legally correct and what's best practice and what's actually reinforcing brands. And I think probably the slight echoes there of Alice's points, in that it's not about stopping these things from happening. It's about making sure that you are being seen to do the right thing as well as doing the right thing. So I think Klarna in this particular instance did the right thing and apologized. What they need to be doing, as with all other brands, is be a lot more transparent. And it doesn't matter if it's financial services or it's retail or it's the hotel industry, about saying, look, the data belongs to the data subject. That's you and me at home. That data belongs to us. It doesn't belong to the retailer, and it doesn't belong to the financial services company or to the payment processing company. It belongs to us, and that's, I think, the fundamental we all need to remember. This opaque world where you've got the retailer themselves saying, well, I'm going to sell you this product, I'm going to sell you some earphones or something like that, that's great, I'm being very transparent. The Klarna in this particular instance, needs to be very clear that we will capture your details if you pay by Klarna, and we'll send you marketing about Klarna. That's fine. Be transparent about it. Be open. Not in the T's and C's, but actually on the transaction page itself, big bold letters. Should be no smaller than the actual data capture or the processing element itself. But I think the payment providers need to step up there as well. If they are capturing that data, which they are in these circumstances, it needs to be clear about what they're doing with that. And I think probably needs to be more robust with the way in which they manage that data, if they're not going to be using it for marketing purposes, and maybe bringing in policies about auto deletion after a certain period of time has elapsed, what security protocols they're putting in place in case of breaches. But I'll just finish off with also saying, I think this is a multi-party responsibility here. There's a multi-party responsibility from the merchant, whether it's the payment process or it's the credit company, whatever it must be, but the retailer themselves is hosting this payment processor. They're hosting them on their site. They need to take responsibility, but they need to be putting pressure on them from an industry level to say, look, you are actually representing us. You might work for yourself, but you've got our cap on here. We need you to be representing our brand, and if you don't, we're going to kick you out. So I think there is multi-person responsibility, and it will come from conversation. It will come from collaboration, and ultimately working out what is the end game. And if these payment processors don't want to use these emails for marketing, and they have no use for it beyond that payment or the period of time that's gone past the need for holding that data, then they shouldn't be keeping that data. That data should be written off and shouldn't be stored. because the more you store it, the more chance there is of there being a breach.
And then in your, I guess in your experience, I mean, Klarna itself is a relative juggernaut now. You're talking about it's a licensed bank, and it's also worth billion. I think it's 5.5 billion or something like that with its previous valuation. So it's a big beast. When similar sized organisations have done this, from a reputational perspective, and therefore from a customer fulfilment and acquisition perspective, how damaging is something like this to a company like Klarna? Sort of on a scale of 1 to 10, I guess. Is it something that actually, in 2 weeks that's going to be it, and there might be some regulations which help the industry going forward, or is this something that might actually impact you? Because I'm kind of keen to understand. There was a big foray and backlash to the actual email, but in reality, will this affect us like that going forward over the next 3 to 6 months?
I mean, speaking pragmatically from experience, I don't think this will have much of an impact on Klarna's brand. I think they've issued their PR, they've got the ICO involved. I hope that changes will be made to stop it happening again. It will probably stimulate debate in the industry, but there are more well-established players in the FS market out there that have got this covered. So I don't honestly think there will be any serious brand damage to it. Whether I think it's right or wrong, that's kind of not relevant. I think, as you say, that Klarna's a juggernaut. There is demand there for its products and services, and I think that demand will outweigh the concerns. But probably pass to Alice on this one is that I think it's not death by 1,000 cuts, but it's kind of it won't help its cause if it's caught up in numerous different battles about things that it hasn't done quite right in terms of compliance. It's not going to help its cause. So if there is this fire that's here now, they need to put it out quickly and be seen to be doing the right thing moving forward. But from what we've seen, there are other fires popping up in different areas, and it is going to help their conversation. But I don't. Alice might have more to add to that.
Yeah, good.
Yeah, I think it's an interesting one, because I think one of the risks, maybe particularly with Klarna, is that when you look at their brand, they've done a kind of fantastic job, really, in kind of creating a lot of pink allure around it. And I think there is a risk that whilst that was initially incredibly powerful in making what's ultimately credit debt product quite attractive, that I think consumers will kind of begin to see through that when it contrasts so starkly with kind of their practices. And I think that alignment with your practices, as Stafford was saying, your alignment with practices and brand, I think, is really important. And if you rest so heavily on your brand, then it almost reputationally you've kind of got further to fall. So maybe we'll start seeing kind of competitors trying to create more of an image of kind of trust and transparency as a consequence to it. But as Stafford said, it's a very popular product, so I'm not sure to the extent it will this specific issue will damage them.
And I was just going to ask, this can always be the final question, but I was going to ask around buy now, pay later in general, so sort of moving away from Klarna but into the industry. It's been phenomenally successful, and I suppose even with regulation, which might, if you like, tell some of the practices that they're getting away with probably a strong term, but they can enjoy at the moment. Do you see buy now, pay later being here to stay? And then in addition to that, how might it evolve? Not just through regulation, but actually just through maturity of the product.
That's a really, really interesting one. In terms of here to stay, I mean, I think I'm not sure I can sort of comment too specifically on that. I think it'll be interesting to see how, if regulation comes into play, kind of how that will impact their business model and so on. I guess what I think we'll start seeing more, and I guess this is just a theme in kind of retail as a whole, is and an element of it that I'm sort of more concerned about is kind of integration into, say, social media, and as you were saying, this kind of blurring of the lines between various different providers and so on. So I think things will only continue to shift that way, and you've already seen it. Klarna have an app and now kind of loyalty programs in some regions. So I'm not entirely sure on kind of the financials and commercials of the business model, but certainly at the moment it seems to be very, very popular.
I mean, from my perspective, putting a finance hat on.
Yeah, what do you think?
Payment processes in general. Well, they're struggling to grow. To become a payments processor, you need scale, and from scale, you need relationships that you might have had from Humpty Dumpty years ago. And the main way you make money is by interchange and helping that payments flow. And ultimately, all that is being regulated to the point where that slice of pie, the pie itself, is getting a lot smaller. So what they've done, and I think what all other buy now, pay later companies have done, which is incredibly effective, is diversify their revenue stream. So you're not just getting it from just doing the payments processing, but you're also getting it B2B from the merchants, because obviously they take a percentage of whatever is sold. And they can sell that because the amount that's sold goes up because of buy now, pay later. So it's a win-win. But also from the consumer, because obviously then in addition to that, they're also getting revenue from the contract that is taken up from the consumer if the consumer cannot pay or doesn't want to pay within, let's say, the 30-day, which is the free interest, the free interest product. So on paper, if you're looking at it from I suppose business model disruption, it's an unbelievably good product. Serving a market which really needs it. But I'm talking that from the merchant's perspective, not necessarily from the consumer perspective.
Yeah.
But to your point, I think that it's that old adage around what happens if I don't pay back in time. And I think for something which is unregulated, to have that question looming over it, that does need to be addressed in order for this to be, I suppose, not taken seriously, because that's not the right phrase, but certainly to be looked at in a more favourable way.
Yeah, I agree. I think with that, particularly around, as you were saying, consequences of non-payment and credit products, and you look at the brand and who they're targeting. I mean, that's kind of the biggest thing and the most significant issue for me is just around communication of risk, really, and where I think there's most need for improvement.
Cool, awesome. Listen, we're going to wrap it up there. Thank you both so much for that.
Thank you.
Awesome.
It's been great to join in.
Yeah, no, that's much appreciated, and I've learned quite a lot today about things which I didn't know before today. So that's awesome. So thank you so much. Alice, if anyone wants to reach out to you, what's the best way?
I mean, here on LinkedIn, and then for more on kind of Go Fund Yourself and financial news and literacy, Go Fund Yourself on Instagram.
Cool. And Stafford, yourself?
Yeah, find us here on LinkedIn, jarang.com, JARRANG. Heard many different spellings of it, or find us on jarang.com. Have a look around. We've got a free set of resources on there, one of which might be useful to people who are interested in GDPR or data compliance and how they can use that with their email marketing. Free to download, free to share around, but please do feel free to reach out.
Awesome, thanks very much. To anyone listening to this, don't miss our other live show, which is called Spotlight, which goes live on Thursday, 3:30 BST, which is 10:30 AM ET. This week we're joined by Matthew Leaney from Silent 8, which would be really, really cool. Other than that, have a great week, everybody, and thanks for joining.
Thank you.